Okay, the fourth quarter is upon us, and recently we've seen some mutual fund companies spit out their capital gains projections for year end. Figured it'd be a relevant time to discuss how capital gains affect a mutual fund share price. Before we dive into that, the skinny on capital gains, there's two types. There's short-term and there's long-term capital gains. Short-term capital gains, anything you hold less than a year, you've got to pay taxes on that gain, assuming you bought security A for $60, you sold it at $80. After having it for 6 months, you got to pay a $20 gain based on ordinary income rates. Same thing goes on the long-term capital gain side. It's a year and a day and beyond. You'll face capital gains rates of anywhere from 0 to 20% depending on your tax bracket. Okay, that 20% does not include, for the highest income taxpayers, the 3.8% surtax for the Affordable Care Act. But with mutual funds, so you'll notice that if you've got mutual funds in a non-qualified account, you're going to be subject to capital gains every year because they're required by law to distribute all of their capital gains to shareholders. Now, the question you might ask is, wait a minute, I'm paying these capital gains and I noticed that my share price went down. Did I lose money? And the answer is unequivocally no, you did not. You paid taxes because you had to, okay, and your share price went down because anytime there's distributions from a mutual fund, they reprice their shares or the net asset value. What you might not have noticed is that to the penny, even though the share price went down, you actually got an increased number of shares. Okay. The only way you really lose money in the non-qualified space having a mutual fund is due to market performance. Okay, not capital gains distributions. Logical question though might be, okay, what happens if I buy a mutual fund in a non-qualified account in November and then it loses money, okay, market goes down, yet it still spits out a capital gain that I have to pay. Can that happen? The answer is yes. So you might want to be conscious about that. You may want to consider not holding mutual funds in a non-qualified account for this reason. You might want to look to individual stocks or exchange-traded funds, which there's no legal requirements for distributions to be made every year.
The Cautious Investor with Ryan Glinn is sponsored by W3 Wealth Management.